You're being treated as you're evil for making money. What about celebrating success? Let's celebrate the Tobys of the world. We need more Tobys.
Welcome to Tank Talks, a podcast that brings you insights and stories from some of the best and brightest minds in technology and investing. I'm your host, Matt Cohen, founder and managing partner at Ripple Ventures. Now let's jump into the show. All right, John, we got an emergency pod here. Thanks for jumping on so quickly. Holy shit, as John would say. What is going on? All right, let's kick things off. So the budget was dropped, as we know, at 4 p.m. on April 16th. Today is Wednesday. There's been a lot of conversation online. I've received hundreds of text messages and emails from investors, founders, as much as you have, I'm sure, from everyone in your network. Essentially, for anyone else who is not paying attention, the budget proposed, the biggest change for everyone listening is the increase in capital gains inclusion rate for individuals from half to 2/3 for annual profits above $250,000, effective June 25th. Now, this capital gains only occurs when you sell assets, and some, things like a home obviously are exempt as principal residence. But for a lot of people who are investors, people who are founders, people who are operators, they often have capital gains because their incomes are really not very dependent and something that they don't really control when they're owners of a business. But when they sell their equity, they do often pay a percentage of that of capital gains tax. So I guess, people are starting to scream, bloody hell, they're going to leave the country. This is the end of the Liberal Party, John. There's a lot of things that we can go with this. I guess just to give a sense of where people are feeling. Their comments like, I woke up this morning feeling a sense of loss for this country. This is the wrong way to build, productivity gains in this country. Harley from Shopify saying, what the hell, right? Toby, one of the greatest entrepreneurs in our country, saying we can do better. These world leaders are looking at entrepreneurs in the face and saying, we don't want you, basically. So I think maybe just to give a sense of what also the capital gains implications are, if you look at the numbers, it really starts to tick up as you earn more than, let's say, $1 million in capital gains and plus that.
Yeah.
But we're also missing out on what the US has, which is the QSBS, Qualified Small Business Exemption of $10 million. So we're still not even getting that portion adjusted. What are your thoughts here, John? You've obviously written a lot about it and talked with a lot of leaders. What are your takeaways?
Yeah. So Matt, one of the frustrating things that there's some very good nuggets in this budget as well, but they're being overshadowed with the narrative. And the issue is the narrative.
The messaging.
So here we are over the last, couple of months that this became the productivity and innovation budget, but really about productivity. And the issue that the government has been touting is the lack of Canadians, both, corporations, individuals, from investing capital in the broadest sense, machinery, equipment, robotics, AI, and capital for businesses. So this is the narrative, right? They go after the pension funds, everybody else going, why aren't you investing in Canada? Okay. So that's the narrative. And the debate on that for the last 2 months has been, rather intense. Now, there was speculation of increases in income taxation or a wealth tax, and they are using the narrative of a wealth tax. This is not a wealth tax. This is a success tax. So here is the problem. They use the narrative that, first of all, we're going to give $20 billion away to special interests so that we can capture more votes. Oh, we've got to pay for it. Let's identify a group of, by their estimates, 40,000 taxpayers. And then that's what they calculated that would actually be impacted. First of all, you're grabbing the 40,000 that is creating the vast majority of the jobs for you. Can you not see the correlation on there? And what it was trying to do, it was trying to, again, polarize this nation and saying, hey, you greedy bastards, you're going to make lots of money. What are you doing? That's not the point. The point is you're kicking in the teeth the very people who you are begging to invest in this country. Now, let's talk about a couple of the constituencies and the impact. Number one, I'm going to give you three, okay, in order of priority. Number one is the young founders. They already are angry in terms of cost of living, not being able to buy a house, lower compensation compared to the United States. It has been over a decade when I used to always hear the rumbling of young graduated Canadians going to the United States. That narrative is now it's banging loud, and if nobody believes it, just go ask a whole bunch of kids that are graduating. That's number one. So now they're saying is, you know what, guys, you are trying to put a cap on my success, and by the way, trying to give me back a little carrot by saying, oh, we're going to have this entrepreneurial. I can't remember what they call it, the offsetting reduction of the tax on the first $2 million-ish. Like, come on. Like, again, this is like peanuts. Like, these founders are trying to create the next $1 billion company, not the next, $100,000 value company. That's number one. Number two constituency is the very corporations and angels in which we've been trying to extract capital to invest, particularly in the innovation sector. Well, you've now just made their return profile that much more difficult. So now when you're looking at on an after-tax basis from a low risk to a higher risk adjusted return perspective, you're making the math far more compelling to not invest in the sector. Again, chasing capital away. The third thing is, and I suspect they're very not sympathetic about this, but those that have already amassed their wealth, who are extremely mobile. I have had 3 good friends leave Canada in the last 12 months. And people say, oh, they'll not leave Canada. Well, guess what? It's very easy to structure your affairs. So those are just 3 constituents. But I would just say to you, the anger and the furor and is overwhelming. And again, it's more about the narrative of Canada taxing success in Canada's tall poppy syndrome.
Right. And it's not only talking about people who are already successful, those 40,000 already wealthy. You're telling people who have yet to have success that they will have a bill to pay.
Correct.
When they have had to take zero, income, let's say, for 5 years, or non-market based, lower than market incomes, just to get to the level of success they want. I am one of those people. I have not taken a salary for the last 4 years from my business. Okay. And I'm playing for the equity. And you're telling me the equity is not going to be as valuable as it was for the people in prior generations. That is the part that I think people are very frustrated by. You said it in your post today, like people are basically saying, hey, I'm the founder or I'm an owner equity investor in a business. I take on all the risk. And now I'm being treated like I don't actually should be compensated fairly for that.
You're being treated as you're evil for making money. Like, that's what about celebrating success? Like, let's celebrate the Tobys of the world. We need more Tobys. Now, what they are saying, and I don't know if you read in some of the details, the caption was tax fairness for all.
Right.
Come on. Except for the 40,000 people, we're going to screw you because you're going to pay for everything else, number one. But number two, so it's not tax fairness for all. It's tax fairness for the maximum number of voters that I can get, and I'm okay at the risk of offending a small population, but the spillover effect is tremendous. The second thing is this, like, one more time I see this false dichotomy of, well, I think they use Joe the Carpenter. I guess the U.S. uses Joe the Plumber, but we use Joe the Carpenter. It's ridiculous that Joe the Carpenter pays a higher effective tax. First of all, bullshit, number one. But number two, Joe the Carpenter, who is he working for or she working for? Whose projects are they working on? And how much risk is Joe the Carpenter taking? Do they have the binary risk of making nothing? Versus an entrepreneur? Are you seriously comparing the two? And the last thing I would just say is exactly what you said. These are not wealthy Canadians. These are young entrepreneurs who want to change the world. And I could tell you that, this is another great example for them to say, why do I, even though I love this country, why would I stay here when I can cross the border very easily? And they're encouraging me to, build $1 billion business. And as we all know, that only happens, 0.0001% of the time. But it's that not being capped on my success is what drives and motivates and incentivizes people. And that's the frustrating thing that we have here.
Yeah, I mean, I think there's just so much pent up frustration around how obviously one, again, what you said, the cost of living, the affordability, the hiring or lack of hiring available. A lot of things in Canada are just a lot more difficult to grow and build. And let's just not remove tech companies from that. Traditional mom and pop businesses that have been owned for 25 years, they're going to want to sell those businesses and retire. Then they're going to have to pay a capital gains tax on that now.
Yep.
And so all those employees who have been living off that great business benefited from the creation of these businesses. Those investors may no longer buy that business, and therefore the founders may just shut it down because it's too costly to run.
Or how about, the folks who have been saving and scrimping all their lives, and they decided to invest in rental properties,
Right.
A second rental property. And now all of a sudden, because the value of that property might have gone up by virtue of, the low interest rates, now all of a sudden have eroded their after tax capital for what they thought was their pension. So again, just it's just very short-sighted. And the thing that's kind of frustrating, again, if you go through the budget, there's lots of good things in there.
Sure. There's the housing affordability, 30-year mortgages, first-time home buyers.
Yeah, there's good
RSP.
The shred there was a little miscommunication on the shred, but they are working on the shred on the actual crafting of the details, the AI stuff. There's good stuff in there, folks. But you can't lose the narrative on what we're trying to solve for.
Right. And so let's talk about this though. Like, how does this actually, because we know there's a waterfall trickle on effect of like how the people who are supporting, innovation and productivity gains will maybe pull back on investments. But how does this get actually passed through and impacting everyday individuals like you and I? So it's a proposed budget right now.
Yes.
Okay. So walk us through what happens next. We obviously know where the Conservatives stand and where the Bloc stands. You've got maybe a bit confusing message from the NDPs and the Green Party, but where does this stand heading into an election next year, and where does it go from here?
Well, I think the Prime Minister's office, they do listen to the feedback, and they have heard that this feedback is quite negative, particularly on this one point, and they are sensitive to it, and they are looking at it. Whether they, do I see them, going back to the 50%? Probably not. But do I see them perhaps tinkering around with the entrepreneurial incentive? Maybe that's where they'll do it. But I think that there might be a reaction back because I think that they did not anticipate the visceral reaction. That's number one. Number two, the Conservatives, who already have an overwhelming support in the country, are probably just saying, we're just going to use this as ammunition. And there's going to be an election, by October of next year. So maybe the full impact of this is not going to really be felt. And I would suspect that if the Conservatives come into power, this is one of the first things that they're going to rescind, which they're going to use this as an election platform. So
they're saying thank you. They're saying thank you for increasing our.
Yeah, I think they're saying thank you. And you know what, folks on the NDP, you know what? Good riddance to some of the crazy stuff that you're doing. And I really don't care so much because I just think that they're just living in a world without understanding how the world actually operates. But I just hope, there's good folks in the PMO. There's people that are trying really hard. Just listen to the feedback and listen in particular to the young entrepreneurs. That should point your compass into the right direction.
I think if they put a QSBS policy similar to the US in Canada for young entrepreneurs, this capital gains increase, so the 66, 2/3 inclusion rate, which basically maxes out at around 30 odd percent, would probably not have as much as an impact, don't you think?
Yeah, well, that's what I think. That when I was saying that I think that they might tinker with the offsetting exemption, I think that's the path that they're investigating right now to see if they could actually mitigate what now they're realizing might be an unintended consequence.
Right. Okay. So just so our listeners understand, in Canada, if you own equity in a Canadian-controlled private corporation, CCPC, for more than 2 years, you own the shares, not options. You own the shares for 2 years, you get around 1.3 million of capital gains exemption. In the US, they have something called QSBS, Qualified Small Business exemption, where they basically have a 5-year hold of shares in a business as a resident of the United States, up to $10 million of capital gains exemption. Massive difference, longer term period. But as we all know, these startups take at least 5 to 10 years to actually have any capital gains delivered anyway. So something like that, please get that message across to this PMO's office, and maybe the middle class, if you will, of entrepreneurs that are still waiting to have success might swallow this pill a little bit easier. Don't you think?
Yeah, and Matt, your message is bang on. Like, you know what? Like, we could shit on stuff all day long, but frankly, I cannot stand folks that just complain with no solution. So if you're passionate about this, please share with your MP or publicly, but give a recommendation of what you think should happen so that you could, contribute to the solution, not be part of the problem as well.
Absolutely. Thanks so much for joining us on an emergency pod, John. Always appreciate it.
All right. Take care, Matt.
Hey, everyone. Thanks for tuning in to another episode of Tank Talks. We hope you found today's conversation as insightful as we did. If you're enjoying the show, we've got 3 quick things to ask of you. First, hit that subscribe button on your favorite podcast platform so you never miss an episode, whether that's Apple Podcasts, Spotify, Google Podcasts, or YouTube. Next, follow us and stay up to date on upcoming episodes and behind-the-scenes content on social media with Twitter, LinkedIn, and Instagram. And lastly, share the love. If you found value in today's episode, share with a friend or colleague who'd benefit too. Your support helps us bring in more amazing guests and keeps the Tank Talks engine running. That's it for today. Until next time, keep disrupting and innovating.